Saugata Bhattacharya, who's economist at Axis Bank, joins us on the show with his perception and perspective really on the way things are shaping up. Saugata, good to have you on the show. Rupee has been touching a new low every day now. It's almost become predictable in that sense. Given the current macroeconomic headwinds, where do you see the rupee headed from these levels? I mean, how much lower?
Very difficult to say, as usual with the rupee. My sense is that there is, in the near term, certainly some room for the rupee to weaken further. But I think we have come to the point where the economic dynamics that are associated with the movement in the rupee, in terms of potential, because for importers, remember now this has become very, very expensive to import items. This has completely offset any commodity prices, the drop in commodity prices and so on. So you might see in certain areas at least, I mean say in power sector equipment, in boilers, turbines and so on, some demand beginning to shift onshore. So that might actually begin to help economic growth and from the investor's point of view, the rupee has also weakened to the extent that an external investor would probably begin to look at the potential returns on their investments coming in at this point in time. So given all of these factors, our sense is that we will see a turnaround in the rupee at some point in time. It's difficult to say whether the turnaround will be at 56 or 57 or 58, but my sense is, from an Axis Bank point of view, that the rupee would probably begin to turn around at some point in time in the near future. When that future is, whether that's the next week or the month, it's difficult to predict at this point in time.
Right. The rupee depreciation and also what's happening with the commodity space right now, commodity prices are pretty much feeding inflation. What is your expectation on how both these aspects can impact the overall inflation picture in the near term?
Food inflation, I don't think you're likely to see any dramatic decline in food inflation because the current episode of high food and primary inflation prices is being ascribed to disruptions caused by the severe heat, the drought-like conditions prevalent in some parts of the country. Be that as it may, then after this, once the monsoon sets in, I presume that we are still presuming a normal monsoon. So if that sets in, there would be some other disruptions because of the rains and so on. So the shortage of food supplies, the disruptions in the food supply logistics are likely to carry on for some time. Post that, there is normally a dip in prices, but given the increased demand that you are seeing relative to the production of some of these perishable foods, at least, I mean the protein-based foods, as the RBI likes to call it, that's unlikely to dissipate any time in the near future. Given this outlook, and if the rupee does not strengthen rapidly over the course of the year, despite the drop in commodity prices, you are also likely to see core inflation at relatively controlled but still not very low levels.
Saugata, sorry to butt in, but I'm just wondering, how do you view the liquidity situation now? Do you think there is any case for the RBI to cut the CRR in its June policy meet, or would it continue with the stance that it has been continuing?
I don't think you'll see a CRR cut in the near future. The liquidity being what it is, unless there is a very large intervention by the RBI in the spot forex markets, which we don't see at this point in time. Liquidity is probably not likely to deteriorate very significantly in the near future. So at least for the next couple of months, you are unlikely to see a CRR cut, because a CRR being the kind of Brahmastra of liquidity, so to say, will probably be held back for some severe contingency that might occur at some point in time. In the meantime, the RBI has already shown its willingness to use OMOs. Very, very unusual that they have a series of OMOs in the first quarter of the year itself. So they'll probably use OMOs to tweak liquidity if it diverges too much from the current levels. But they will still be quite constrained in using the liquidity measures because of fear of some speculative activity in the forex markets.